Good NFP day, Warriors. Who's ready? I'm not. Brand, thank you for the well wishes. Thank you very much. And I'll get fried today. So, Glenn, how are you? James, Sinatra, hey, Ryan. I don't think it'd be boring, do you, buddy? Hugo.
Not in the slightest, mate.
Kay is here. I know Stelios is here too. Hugo, Paul, you were born ready. Yeah, right. Born. I was born to run. Bruce Springsteen. All right.
all,
I'm.
all the all the glory
I.
hunters come out for the big numbers, don't they, Dale? Stell's
Yeah.
here. You know,
Yeah. Yeah. Sam Perrick is
What
a
is
new
there a number
name.
today? Is there something today? I
What?
forgot.
What's your phone number again? Two more coffees. All right. So anyway, we have a few new people. Spread the word about F.A.C.E. It's the best thing on the net, and ForexAnalytix has the best team of analysts on the planet. All right. Uh, may not be famous, just good. So anyway, let's take a look at what we're facing coming into the number. Uh, I just want to show the weekly in the S&P. And, guys, I was thinking about this, before Tuesday. I don't think I was the only one thinking, well, we'll probably see new contract highs. I thought we'd see it by Tuesday. The way we closed up here, uh, you know, we weren't that far away, right? But I think a lot of people got trapped. You know, I know there was some overnight action where people could have done something, but when I woke up in the morning, we were already 30 handles lower on Tuesday. So, it's possible people are trapped. We took out 5,500. It looks like it's trying to hold here. I don't know what news the market's going to like. If it's a weak number, is the market going to like it because it'll guarantee a half a point cut? Or if it's a strong number, uh, the economy is okay, employment's okay, and maybe the market, good news is good news. So we'll see. I have no idea how the market's going to react. Do any of you guys? Let's talk risk. What would be bullish risk after a week like this? And who on the team? And let me start with Ryan. Thinks that we could reverse a pretty negative week on one number. If there's any market that could do it, Ryan, it's probably this one. But
yeah.
and Nasdaq looks, it never negated on the daily the key reversal that we had. And this still looks like a failing rally to me at 78.6. So what do you think the market wants?
Well, there's aftermarket who wants a stinky number and a 50 basis point cut. That's what half the market wants. But stock markets obviously want something that will send them back up to the highs. So, probably good data is going to swing it for them.
Okay.
Your S&P is right close to my key level down here, 54, 40, 50, right on the number. It's the 38.2 fib of the August rally, I think.
Okay. Off of this rally where this is 38.
Yeah,
Right
and
yeah.
that was a level when we came up
Yeah.
from further below. You need to look left a bit more. It was a resistance level, then a strong support level. So it's a big level all on its own as well. So yeah, you can see
all right,
along there. It's you need to go a bit more left to see it, but it's there.
okay,
Stick a line in 54.40, you'll see it. So yeah, it's a big number, but it's broken down. Technically, it's playing nicely. If you're short, it broke 55, 50,
right.
60. It's holding it as resistance. It's broke 55. It's holding it as resistance. So technically, it's doing the right things. But you know what it's like. We got a big number. You could be could either be down at 54. You could be up at 56 just as easily today, can't we?
Yeah. Yeah, and I'm not sure how the market's going to react. I think it's going to be real whippy both ways. It seemed like a battle yesterday. And the last few days, every rally was met with pretty good selling, so basically what we did on this rally here is just old support, new resistance. It tried again here.
Exactly that.
It
55 the
is
same.
it
Yeah.
is diverging, but it's not off a low. But if I went to Ryan's favorite chart for entries, the 15-minute chart, I don't know, doesn't look that great to me. Even short term, we don't have divergence here.
Yeah,
So
I won't be trading that chart over the NFP. I can give you a clue.
yeah, all right. So how about bringing in Kman?
Good morning, Dale. Good morning, everybody. Thank God it's NFP day, not
It
focused.
is. It is. So Japanese yen retested
Yeah.
the recent low, right?
Mm-hmm.
I don't see any reason why it should hold it except for a bounce. Do you?
Yeah, well, I mean, it all depends on the number. A lot of people went longer yen. If I see what the bank strats are putting up, they're all yeah, very positive on the yen. I think it's going to be a bit binary today. The market, this market is especially hoping for a bad number to send it down to 140. But we'll see what the number will be. Really, it's really the decision maker, I think, for the 25 or 50 BPs that we are going to get from the Fed today. So if it's leaning towards the 50, this one is probably going down to 140 at some stage. But I'd say be careful if it would put in something stronger, especially on the unemployment rate, getting down to 4.1 or 4. Would see a bit of forced dollar buying, and there's nothing worse than forced dollar buying on a Friday.
Okay, so this is the disaster du jour, still putting in a higher low, but got, pretty close to the August lows. NVIDIA, uh, I still think NVIDIA and the AI things are pretty important here. And NVIDIA doesn't look great. Look at this. I mean, I know it's holding, but it almost looks like we're going to, we could rally maybe even all the way back to 116. But, you take this out, you're going to take the 90 out. So Broadcom almost has.
Mm.
So maybe it's a foreshadowing of what NVIDIA will do. And I'll tell you this, and it could move in a long, quickly. I don't think, it's going to do it. But if we ever take out 90 in NVIDIA and we've had
Correct.
two lower highs, we're going to have a meltdown
Yeah.
in the market.
Isn't that an interesting one today, Nvidia? Because if you think of it in a bit of a naughty way, AI will take away or might take away jobs because AI is going to do the stuff for you. So if we get a bad job market, is it bad for Nvidia, or is Nvidia going to come down in sympathy and then all of a sudden rally massively on a bad number, on a bad jobs?
Yeah. Yeah.
Because generally bad should be bad, right? I mean, if you get a bad jobs market, stocks should come down. But Nvidia, couldn't that be an outlier?
It has it's the only chart of the Mag 7 that has made two lower highs.
Mm,
So it has the most negative chart.
yeah.
A lot of these before the break in August were making new highs, right?
Mm,
Except for Google, which has looked terrible. And this is an ugly chart. I think 140 is real doable. But, they could always like hold it here and then rally it again. But Google doesn't look good. And, it didn't have lower highs. They just peaked. Same with Netflix. With Netflix looks, the best. Amazon doesn't look terrible, but it's having trouble, into this gap area. I don't know. I mean, no one's looking. I mean, I don't hear a lot of people being bearish about the market, even though it's down this week. Do you?
Yeah, but
I
bears have been burned so much.
Yeah, that's it.
Then at one
Okay,
stage they are silent, and then watch
and
it
then
come
it
down. You will
happens.
they will all come back out of the woodwork.
I know one guy who's been, selling rallies forever. Okay. Was right in October when it bottomed at 3,800. But, from, I don't know, 4,300. And then once we started making new highs and finally threw in the towel a couple of weeks ago, it's, looking for higher numbers. So, and that was a resolute bear because, he's stuck with his count for a long time. Anyway, we'll see. On the heat map on Monday, the two strongest things on the board were wheat and nat gas. And I've had someone tell me that the Widowmaker is kind of a contrarian trade for when there's risk off. But that looks like it, there's some possibilities here, and it's doing that in the face of a, crude breaking down. They're different markets. So Anas said he likes, they're bullish natural gas. We start getting through here, this could have been just one, and this could be a right shoulder, and this could be a neckline. Nat gas looks pretty good. Bitcoin, vulnerable. To me, it looks vulnerable.
Hey Dale.
Hey, it's Dell.
How
Yeah.
you doing?
How
How
are you?
you doing?
Oh, okay.
Can you hear
How
me
are you?
okay? Yeah.
Yeah. How you
Good, good.
doing, buddy?
I'm very well.
You want the
Just my
charts?
my 2 cents. Yeah, I'll take the charts. I don't have that much to show, but I will take them for a bit. Share screen. Stop one. There we go. Um, what do I think about the number today? What do I think about markets in general? I think that equities are still on an uptrend, and if you go back a little bit, you were still on a making higher highs, higher lows. Sorry, it is all not a higher high by a little bit, but still the lows are still there. I really want to see. I know it's not close, but really we need to see below 5.1, so 5,100. For me to say, right, this is it. Something's happened, and we're going to be going lower. Until then, this for me is sideways consolidation, and unfortunately, bears have been burnt over and over again, right? Any dip gets bought straight away, and technically, I really don't see anything that makes me bearish yet. Would I go all out long here? No, but if you ask me to trade this, I would buy it. Now,
Okay.
regarding the numbers, it's a tricky one. I remember when I first stepped into the trading floor at Barclays in 2001, my boss said, it's simple. Bad data, markets go down. Good data, markets go up. Well, after 2008, that's all changed. And the new normal is the opposite until it isn't. So what do I think? I think if we get a miss, we go higher because the markets, as usual, will discount more cuts or more easing or less, less higher for longer. And we have to admit that the problem now with the Fed is not inflation, because inflation is grinding lower. I'm not saying that inflation is back to normal, because we've got prices which are baked in. We had 2 years of 8-9% inflation, which were terrible. We now have 2.5%, 2.6, whatever it is. It's really bad. We're still going up in prices, albeit at a lower pace. But the problem now is employment for the Fed. And if we see a deterioration in employment, which we already started to see it, but if it continues, then this is what they need to see for them to be saying, right, okay, we're going to be cutting and cutting fast.
Well,
So
good morning.
okay.
Good morning, guys. And Stelios, I
Hey,
have to
Blake.
disagree. I have to disagree with you there.
Okay.
I think that if we have bad data and the employment data is not, it's one thing if we have a slight miss. You know what
I
I
said
mean?
the slight miss. Big miss, I think is going to be bad, but slight
Okay.
miss.
All right.
Yeah.
Okay. I just want to make sure that we're clear
Yeah.
there, because if the data is bad, like let's say we create 50,000 jobs and unemployment ticks up to 4.3%, or stays at 4.3% rather, where the market's looking for a tick lower. I think that's bad data, and I think the market's going to respond negatively.
I agree with that, because at the end of the day, bad employment data means less people working, less people spending, less taxes being collected by the government. It's really not good. So in the grand scheme of things, yes, I agree with you. In the short term, if it's a small miss, I think the markets just go back to, okay, we're buying everything because of more easing, which is a little bit silly, but that's how they are.
It is, and but one of the things that I think the market's super sensitive right now is the version of the yield curve, you know, and
Yes.
everybody's very well aware that this usually when we reinvert the way that we're doing it's usually on the cusp of a potential recession. That's why you're getting all these calls for, you know, 50 basis point cuts, and you know the Fed's going to have to act, and Fed's going to have to, you know, we're going to have to get the POW put, which is a whole nother conversation that could go way longer than the next 15 minutes regarding what the Fed will do as we go into the end of the year. Because Dale, you said it yesterday, and I absolutely agree with this. If the Fed only cuts by 25, because let's just say for argument's sake, today's NFP is you know, it's meh. It's, you know, in line. CPI data comes in line with forecasts, and then the Fed only cuts by a quarter. The dollar will absolutely scream, and the market may convulse. Who knows? I don't know. Anyway,
Could be. My view on the dollar and yields remains the same. I've been saying for a while, ever since we broke below this in the 10-year, and this was a perfect retest. I think we're going to resolve lower, and look where we are. I mean, below 367 is the abyss of the abyss. We go to 330. So you know, bad number definitely takes us down in yields, because you know more rate cuts expected, etc., etc. And it's a similar story in the dollar. You know, we are in a level which has been tested quite a few times. And I said before, I think it's going to be resolving lower, and it is for now. But like Blake said, you know, if they only do 25, oh, I think we're going to be squeezing a little bit here. So interesting one. It's a very difficult to call what's going to happen to stocks and all that after the number today, but let's see. Let's see.
Well, hey, we only have like literally 12 minutes until the data comes out.
I'll
So
pass
Dale,
it
I'm
to
going
you,
to take
Blake.
the charts. Yeah, we got to prepare for this. And I want to say good morning to everybody. Dale, like I said, that your idea of the Fed is, I think it's a reality too. Not a reality. Well, it could be a reality if the data complies, that the Fed just delivers not what the market's looking for. And that could be partially political too. And, you know, where they just don't want to be viewed as super political. Maybe they'll deliver 50 basis points if things really start to unravel towards the end of the year.
When did they meet after September again? In October?
Yeah, in October.
No. The next meeting is
Oh,
after the
November.
elections.
Yeah, it's after the election. That's right.
Oh,
Yeah,
okay.
that's right.
That's when they could really open the guns if they need to.
Yeah. I mean, it's a great point. Hey, well, let's go around the horn and find out what everybody's looking at for today, because today matters. Obviously, we have the Canadian jobs report that's coming up too. It's not just the U.S., but it's Canada. And I want to just bring up not specifically what I'm looking at right now, but I think something that's very interesting that we were just talking about in the ForexAnalytix chat room is the Canadian yen. You know, the Canadian yen, if you have weak US and weak Canadian data today, both combined, this Canadian yen could really, really take some heat. I mean, we have a double top that's trying to play out. So you look at just what the extension would be, and that's going to take us back to lows, right? So if you have a combination of weak US jobs data, that means the dollar yen's probably falling pretty aggressively alongside yields. You have Canadian data, obviously it's Canadian data, then the Canadian comes under pressure. The Canadian yen could be a really, really good trade if you have a double banger of two missing job reports. Anyway, I just wanted to bring that up because I think it's a very interesting setup, because we're trying to break down, we're kind of flirting with the breakdown point. But again, you need dual misses today. So that's something that I think everybody should be on everybody's radar, just because we have both Canadian and US jobs reports on. But let's go to Ryan really quick. Ryan, what are you specifically looking to trade today?
The Brazilian real, Polish zloty.
I don't have that one on ForexAnalytix. I mean, I
See,
even have like
no one's
Bitcoin
looking at
and
that.
yields, and I
No
just
one's
don't have
looking
that
at
one.
that.
Okay, what are you really going to trade?
I'm looking. I've got a couple of orders in gold, buy stops above the highs. I'm in an hour whether to go with it or not because there is a risk of a data spike and reverse. But I've got to scratch the itch, so I've got
That's
to
a
go with a
hell
buy
of
stop.
a, I mean, that's August 24. I mean, that's I guess two-week range just pegged at the highs.
Yeah,
And there's got to be stops above those highs. There's got to be stops below here too. I mean, below
Yeah.
2470 as well,
Maybe
right?
they have to clean everyone out. They take out the shorts and then they take out the longs.
Both sides, yeah.
Yeah, you could do it the other way. You could go for a short through the
Oh yeah.
2470 level. But I want to go with the trend rather than against the trend for this one.
Okay. All right. So and it doesn't, I mean, I don't disagree with you. I would hate to be short right now. If I was short gold, which I don't think anybody is, but if I was short gold, I would be absolutely pooping my pants right now. Out of concern. So, I mean, that just, I mean, look, we're pegged at all-time highs and, I mean, that is obviously a very bullish trend. So it makes sense. All right. Anything in the FX land that you're looking at?
Yeah, euro dollar up at my
Okay.
big 112 level. That's within firing range for this type of number. I went short up there last time we were up there. That was my big level. I was going to hit that one, whatever happened. So I'll be watching that on another move up to 112.
And are you going to be looking to short up there? Or are you looking to play a breakout today? If it's
Yeah,
bad, like let's say it's weak data.
Yeah, if it's really bad, then I'll probably leave it alone. But again, I might look to put in a buy stop for some point if it sort of holds over the data. But I decide the data's that bad that it's probably going to break, then I'll probably go with a buy stop again. So I could have a little short and then reverse it just to play the tech level because it is a big level. If we break there, then we've got to break out
It
far
is.
more than what we've had previously.
So Kman, thank you very much, Ryan. Kman, what are you looking at today?
How many? How many? How many
Oh,
can I
I'll give you
you?
two. How about two?
Right. Okay. So I'm already long gold, as people know in the room, and I'm ready to add if it breaks topside. 2470 is where I'm leaving the ship. Well, if it breaks and holds below. The
So
other one
wait,
I'm looking
to
at
follow
is
what you're doing in the ForexAnalytix chat room, if you're in the trades room, we could be, looking, this is what you're trading right here.
an
Okay.
add.
So just so people know, in
I'm
the
already.
ForexAnalytix chat room, that's where you find it. Okay. So continue on.
Okay, I can only give two. All right. If we get a really outstanding number, I'm going to be selling euro dollar, I think, because that's with the ECB coming up next week. But that is, I give you one ID each side. On the flow show, I gave a few more.
All right. And remember to guys to listen to the flow show. I actually listen to the recordings when I get up. That's like what I prefer to broadcast that over CNBC. Listen to see what Ryan and Kman are up to, and gets me up to speed on what's happening in the FX market. So if you're not listening to the flow show, you can do it. You can go back to YouTube and the stream was on a couple hours ago. So thank you, Kman. Dale, what are you looking at today? Give me a couple ideas here.
Absolutely nothing. I'm thinking if it's a decent number, that the dollar still hasn't made a new low, and that we could still get a C wave back to 102.50. See how it's trying to put a little reversal in?
Yeah,
So
right at the
I'm
618
not
here.
buying it. Okay, here's a lesson, guys. I used to, because I thought I could sell this market at 102.50, say to myself, well, why don't you just buy it and ride it to 102.50 and you'll have a cushion when you short it? Because that's not the trade. Because it may not go to 102.50. It may just crater to new lows. So, just because you want to buy or sell something at levels doesn't mean that it's a right trade to be long or short into those levels. Everyone with me on that? Because that cost me tens of thousands of dollars over my career early on.
100% agree with that.
Okay. And I learned that from you. That's not the trade. Okay. And now I don't do those trades.
Yeah,
And I don't-
everybody says, well, you know, if you're not bullish, that means you must be bearish. It's like, no, I'm still bullish or
Yeah.
I'm still bearish. I just don't want to play it the other direction. And I think the risk is that we could still go the other direction,
Yeah.
but I'm not willing to do that because it's against my bias. And that's
Yeah.
what you're saying. And it's really important to understand that concept.
I think everyone's done that.
Oh, yeah.
Just so if you still are, stop.
All right.
That's my coaching.
All right. So you think the dollar has a risk of a bounce, but you don't want to play it on the long side. And
Right.
Obviously, if we have some decent data today, and look, if you guys have been betting against U.S. Employment data, you know it's a tough bet. How many times have we beat the jobs report in recent years? I mean, you know, you look at the headline data that and you look at what we've gotten in the last year and a half. I mean, it's like a consistent beat. Now, obviously, we're starting to show some weakness now, and that's one of the big, obviously,
it's a consistent beat if you forget about the big revision.
Of course, there's a big revision, but the market's not trading that today. The market is going to be trading the headline number. Don't go in and saying, well, we got 100,000. It's really 50,000. Don't do that because the market's trading the number today. They could give a shit less on what those revisions are right now. One of the things I want you guys just to watch the cable today, because I think this could be played either direction. You can see that trend line right there. We break back below 131. We're going to end up having a failed breakout. This thing's, going to break down. And you guys live in the UK, and I know you guys are probably really hesitant about buying sterling. The flip side is it is a bull flag pattern. So we get above 132. We're going to start stretching our legs. And that's when the cable starts doing things where we're looking around going, why in the hell is it going higher? I don't know, but it is. And, and I think most people that trade sterling probably would be scratching their head going, oh my God, we're trading at 133. Oh my God, we're trading at 134. Why is it going higher? I have no idea. Although there was a capitulation back here in Asia, September of 2022. And that's probably more of a generational low when we hit parity. So, you got to look at this sterling is still very constructive while we're above 131. So I think 131 to 132, and we're really close to 132 this morning. So we have data coming out in just a few minutes. Any last minute thoughts from the team here? You guys go ahead and as I pull up everything to get ready. Whoops, that's not what I wanted to do.
Yes, I think everyone should take advantage of the best prices to be in the best community.
There you go, Dale. I mean, look, we have this is the best prices we offer all year, and then when they're gone, they're gone. So thank you very much for mentioning that.
I just want to say keep an eye on yields because the 10-year is really at support and the market is still quite one-sided, pretty short still. So I think we might have a risk of a big squeeze in bonds if this is bad.
And if yields fall, what typically
TLT
does the dollar
if you have
do?
time. You don't have time, but if you could show TLT right at 110 to a major, where it's at right now, we start closing above it. It's a major breakout.
Yeah,
and,
I mean and TLT and the ZNs and the 30-year, what they did is they gave us a false breakdown.
Yeah.
At the end of last week, and then we're going the opposite direction, which is very bullish bonds. Bearish yields.
They did that in August too with that big down day. So but anyway, they look pretty good. The weeklies look great. Anyway.
Yeah, so
it's probably a short.
I'm sorry,
it looks so good.
Remember, we do have Canadian and US data, so don't, just realize that I didn't get a chance to look at the dollar CAD, but remember the CAD yen, weak data across the board, and there you go. All right. All right, guys.
I think for the Canadian dollar, it's better unless they go into divergence, good US, bad Canada, or vice versa. It's better to trade crosses than trade dollar CAD.
There you go. Maybe the Canadian yen might be the trade, right? So, guys, heads up. We are coming. What are we expecting, Ryan?
164, 165K.
What's a number you'll be looking at internally on this report, Ryan?
Unemployment rate and the participation rate.
Okay.
That's the one you need to focus on. Forget the headline this time around.
All right. Yeah. Watch that unemployment rate expected to tick lower at 4.2%. We have 10 seconds for the data. No more bets, folks. No more bets.
Rien ne va plus.
Here we go. Oh, strong data. Oh my
142.
One,
God.
no,
4.2,
No,
4.2,
142.
142 revision is lower as well.
But
4.2 unemployment.
look at the dollar.
Why is it strong? Oh, average hourly earnings is stronger, but what's
Average hourly earnings. Holy cow.
0.1 higher? Okay.
Wow.
Well,
It's
the
not.
dollar's
It's
giving
not
it
crap. It's a
back.
good report. It's a good report. You know,
It,
if that came out 6 months ago, no one would have complained about it. But in this current context, that's a decent report.
yeah, I'm not
Say
sure.
But
goodbye
what
to
do
your
you do
50p cap.
here?
I'm
I
not
mean,
sure about that. I think
the
we
Yeah,
have.
the
dollar's getting
dollar.
whacked.
Yeah, the
I
dollar.
don't think it's good.
Wow.
But anyway, yeah.
Wow, that's a shakeup.
By
Holy
the
cow.
way, Canadian unemployment ticked up from 6.4 to 6.6. Expected 6.5. I know nobody's looking at CAD right now, but there you go.
He's not great, huh? The Canadian.
Yeah.
But look at this cable. It's above 132 now. It's holy cow.
Dollar yen going lower as well.
Dollar yen is rocking lower. Holy cow.
Yeah.
Wow, this is some pretty impressive moves here. What a big
The only thing I can
reversal.
think of this is that the market was looking for something better because of the storm bounce back, but that's a flaky excuse.
Oh my goodness, look at what is happening here. Holy cow. So what do you guys do with this data? I mean, do you lean into it? Do you sell dollars here? I mean, I'm already short a lot of dollars, but it's like, do you lean into it? That's the question. I'm not really, I don't have a good answer. What do you guys think?
Well, I've just pulled my gold. I've just pulled my gold buy stops because I'm not buying it on the back of that data.
I'm closing my dollar yen here at the 142 level. I mean, I'm short it yesterday above 144, so I just closed that out. You know, this thing just took an absolute nosedive, and I wanted to just cover it up down here at the lows. This is the 127% extension too. So anyway, it's kind of crazy. I'm not sure what to do with all this, and I want to lean into it, but I don't know if that's the right call this morning. So yeah. Anyway, matter of fact, I'm going to be closing out all of my dollars right now. I just did. So, all right. Well, Dale, I think you're going to have to take it because I got to do some business over here, bud.
Okay, go ahead, buddy.
All right.
Yeah, it's
All right.
not
Good luck,
it's
everybody.
not easy. Okan Abar will straighten us out here. He's a very insightful guy, and I want to thank you, team, for all the great work you did this week. Thank you, Kay and Stell. Good to hear your voice and you being here, and Ryan and Blake, and we've laid it all on the court for you. If you appreciate it, you take advantage of the sale and join the community. Okay, Okan, welcome back. Great to have you here, buddy.
Yeah, great to have you too.
What do you make out of this number, Okan?
Well, the first thing I make out of it is that the Fed is going to cut the rates, and it is not going to be 50 basis points. It's going to be 25 basis points, not as expected as people
Okay.
expecting. Some
Right.
people are expecting 50 basis points. So I
Right.
think it's time to start cutting the rates by 25.
Okay.
That's
So
right.
will risk be disappointed by that?
In terms of the stock markets, I think
Yeah.
the stock markets have that's a good case for
Good
the stock
question.
markets. No, that's a good case for the stock markets. I think the stock markets will get some support from that, just because
Okay.
the Fed is not going to cut the rates by 50 basis points, but
Yeah, they're
25
not
basis points.
panicking. In other words, they're
Exactly.
not panicking.
Right.
Okay. All right. So tell us what's on your mind. And
Okay.
you made some great calls. You were bearish a dollar the last time we talked, and you
Yeah.
were bullish silver. Both of them worked. Um, status quo. Is this the beginning of an emerging bear market in the dollar that has legs and staying power?
Yes. Uh, Can I share my screen?
Yeah, sure. Blake, if you don't mind unsharing, there you go.
Sorry about that.
That's okay.
It's all right. Well, I have some slides for you today.
Oh, wow, a presentation. Okay.
Yeah, exactly. And I'm going to start with, if I may, with the Fed funds raise. And when, the last time we spoke, Dale, I mentioned to you that about months ago, early or late February, I mentioned that the Fed is going to start cutting the rates starting from September, which many people thought that is too late, but it wasn't too late because I was looking at this forecaster, which I built myself using the Bloomberg platform. What I have here is if you recognize this blue line here and compare it with the white line, which is the Fed fund rate, and the blue line is my forecaster about when the Fed is going to start cutting the rates or start raising the rates. If you look at this blue line here, for example, in early 2006, this blue line started falling, but the Fed started cutting the rates a year later, about 1 year lag, right? So it was around late 2023 when this blue line started falling, as you see on the screen. And after about a year time, it is a good time for the Fed to start cutting the rates. So the history is going to repeat itself like it has happened in 2006. So this suggests that, it already suggested to me a long time ago, but this suggests that this 18th of September, the Fed is going to cut by 25 basis points, which I think that it's a good news for the stock markets. However, I think that now I'm switching to the next slide.
Yeah,
I
got
think
it.
that the stock markets are going to have some headwinds because of other reasons, and which is the differential between the central bank's policies. For example, if you look at this European Central Bank, they already have started cutting the rates while the Fed remained at 5.5%, right?
Yeah.
So this is kind of a differential in the monetary politics. And we have seen this, we have seen the result of this, especially on the Deutsche Bank's currency volatility index. If you look at this chart, where you'll see the orange line showing you the volatility index for the currencies. Okay, for example, from July till August, this volatility in the currency market has risen, and it is associated with the S&P falling. So this many times this happened. This is the case which is happening. You see here, for example, March 2024, this volatility index has risen, and the S&P, you see, has dived. And the volatility index fell, the S&P started rising, you see? So these are working against each other. Now, looking starting from August and until today, we see there is an increase in this volatility. Why is that? It is because we're still going to have differential of monetary policies between different central banks.
What do you think ECB will do next week? They're meeting next week. They're going to cut again?
Yeah, they're going to start cutting again. But again, we're going to get news about Fed being whether it's going to be reluctant or not. So people are still not going to be very certain about what the Fed is going to do, because as you can see today, the data is not really bad. It's good number.
Yeah.
Simply because the unemployment rate is still falling. You see, the unemployment fell to 4.2%. Well, just the non-farm payrolls just missed the estimate. That's only about 20,000 people, which is nothing. All right, so I think that going forward, we're still going to see some. I think this index, volatility index in the currency markets, is going to increase, which suggests that we might see some pressure on the S&P going forward. So that's what I think about the S&P.
So
And
what do you give more weight to? That a quarter point is good for the stock market, or your volatility index that's saying it could get weaker? Because they're
well,
opposite narratives.
right, exactly. I think
So
okay,
maybe it's, I don't know, it might be the right answer, right?
well, of course, I don't know, but I think that the Fed is going to start cutting the rates by 25 basis points, which will be perceived positively from the market. But
Okay.
the market will continue to watch this volatility index of the currencies. If the volatility index continues to increase, then some investors may be reluctant to buy stocks. But if the volatility index falls in the next few weeks to come, when the Fed
means
cuts the rates by 25, it's good news, definitely good news.
okay.
So we have about 2 weeks to go from now. So until 2 weeks time, we have to watch these two. We have to watch this volatility index and
Okay. Are you still there, buddy? Hello? Okan. Can you guys hear me out there? Laura?
different markers to
Okay. Lost you for a while.
forecast. Yeah. Okay. Are you with me?
Now, yeah, but I don't know
Oh,
what you were
okay.
saying the last couple minutes, but go ahead.
Oh, okay. Okay. Basically, what I was saying to you that going forward, we should be watching this
Okay.
currency volatility index.
Yeah.
If the volatility index falls, definitely I think that this S&P 500 is going to find some support. But I think that there are some good reasons for why this volatility index to stay around this elevated levels. So, which suggests to me that S&P 500 may be sold off in the coming few weeks to go.
Okay. Got it now. Got
Now,
it.
what I want
So
to do,
short-term negative, long-term bullish.
yeah, definitely,
Okay.
exactly,
Okay.
got me right. Now, what I want to do is I still want to continue to talk about S&P, but I want to relate it to the crude oil. So let me talk about crude oil just a little bit. So I am doing some relative pricing, if you will. Okay, now I am looking at the crude oil. And from crude oil, I will relate it to how S&P might be influenced from that and how the dollar may be influenced. Now, looking at the crude oil, I am watching the hedge pressure of the crude oil in the pane below. You see here,
Yeah.
the blue line is showing you the hedge pressure, and the red line is showing you the speculative net positions. Hedge pressure, let me explain just very quickly. Hedge pressure is when if the producers feel that the price of the commodity that they produce will fall, they start short selling the futures contracts. Okay, so hedging pressure going up means that the producers are selling. Okay, so it works just a little opposite. So here you see the blue line has been going down, which means that the producers have been selling less. So that's what it means. While the speculative positions, net long positions, have also been going down. So what this tells me that the interest in the commodity, in the crude oil market has fallen. So the market is out of, so the market is staying in cash and not having any exposure against the crude oil. So this suggests that in the next few weeks, the commodity, the crude oil, is going to maintain low levels, but it's not going to go higher and it's not going to go lower. Okay, so that's what this is telling me. For example, if you look here, 2022 between October and December, do you realize that that when the hedge pressure rises and speculative net positions fall, this is associated with the selling pressure of the crude oil. Crude oil. Why? Because hedgers are selling more and the speculators are buying less. So, but here they are working both together. So, both of them are falling. So this tells us that the interest in the crude oil is falling. So I think that we're not going to see much of a movement going forward. So this is also good news for the
So
S&P.
this is not a technical breakdown that we had. So
No.
no.
No, it's not a technical breakdown, but because if it were a breakdown, technical breakdown, you will see a significant increase in the volume, but
Hedging.
the volume hasn't changed too much, and the open interest is still high.
Okay.
So,
right.
when you compare it to the December levels or June levels, March levels, it's still high. So it's not really a break.
So it's a really do nothing market right now.
Exactly. Yeah.
Okay. Got it.
And let me switch to my next slide, which is about what's going to happen to the euro dollar. Well, I look at the euro dollar from a different perspective in that if you look at this red line, this is the differential of the financial conditions indices between the Eurozone and the US. So as you can see, lately, in the late years from 2022 until this time, the financial conditions index has been rising in favor of the euro. And this is also very well working with the euro dollar. As you can see, the euro dollar is rising, and as the financial conditions index differential is rising. Again, let me repeat this: financial conditions index differential is calculated by Euro's financial conditions index minus the US financial conditions index. Okay. So what I see from here is that there is still just a little way out for this red line to go, which means why is it going to continue rising but slowly? It's going to continue rising because the next week, 2 weeks later, the Fed is going to start cutting the rates. So I think that this higher levels in this red line is going to maintain. So this it's not going to fall. It's going to continue to rise. So if it's going to continue to rise, this is a good sign that the euro dollar may find some support from 111 area. Okay, from 111 handles will be some key levels because it has already broken, but it is going to make a base around here, and then it will start to continue up to 115 area in the next 2 or 3 months. And this is supported by the fact that this blue line, which is
Could we pull
the
back
next,
to 110, 110.50, 110 even before that happens?
well, it is a good probability that it might happen because the volatility is high. So I can tell you that there's absolutely about 70% chance that it might hit to 110.50, maybe
Yeah.
110, just below 110.
Yeah, that's
50
what I'm
maybe.
looking for. So you see that as a possibility
Yeah, well,
or
because it's going to have
to
to
buy.
test.
Yeah,
Yeah,
got it.
yeah, exactly. And
Okay.
for example, the smart money, look at the smart money, what it is doing. The blue line is showing you what the funds are doing. The funds have been buying the euro dollar starting from the middle of 2024. You see this rise here? So
Yeah.
the funds are buying. So the funds are not buying it to sell from just by making 500 basis points. They want to
Yeah.
wait for about 10 basis points,
Yeah,
1,000 basis
for
points.
that. They're looking for the 120 target.
Well, yeah,
They're buying
exactly.
it for
But
120.
yeah, but
Right.
so I think in the next few months we will see 115,
Yeah.
and then we'll get back to 110 again, and then from there we will go up to 120.
Okay, that kind of fits that this next wave up is 5 to complete the whole first wave in euro. And then you get a wave 2 pullback. And then the big money wave happens, 3, right? We're completing the first wave up, maybe at 115, like you're saying.
Yeah,
And then, yeah,
okay, you hear me?
yeah, I hear you.
Okay, great. Yeah, the 115 is the first wave, and the
Yeah,
end target is going to be 120. That's going to be the
yeah.
second one.
Okay. Great presentation again, Okan.
Thank you.
How things going for you in your home in your country? How things in Turkey for you?
Well,
Huh?
from the time we spoke until today, it hasn't gotten better,
Yeah.
unfortunately. Uh,
Okay. So how's the Turkish lira acting? Should we buy it?
uh, no, we should actually sell it because Turkish has been strong when you compare it with the inflation differential between the US and Turkey.
Yeah.
So, and many exporters are complaining about why Turkish lira is so strong, and it is also so strong that it's not letting the stock markets go higher
Okay.
because relatively Turkish stocks are being more expensive because the Turkish lira is too strong. So, when S&P index was rising and then in the last 2 weeks, Turkish stock index has been going to the south direction drastically. So that's why the reason why this is happening is mostly because of the Turkish lira is too strong these days.
You have any worries geopolitically with what's happening in the region? I know it's not
Yeah,
your wheelhouse. I know that, if looking under the hood of the markets is your wheelhouse, but do you think about that being there? You're in the region.
yeah. Well, everybody in the world should be concerned about what's going on in the Middle East region these days. Uh, well, from
Yeah.
the worst perspective, it is terrible things that are happening, as you know. Um,
Yes.
from Turkey point of view, it is also bad because the 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 region is very very hectic. A
Volatile.
lot of a lot of
What's the talk on the street about it escalating? I heard there's more news about Hezbollah and Israel today. Um, uh, is Iran gonna get involved? Is Iran gonna retaliate, or they're not? And do you think
uh,
it's going to escalate into something worse than the terrible thing it is already?
I think that in the next few weeks, I think we're going to hear some good news. I am also
You
wishing
think
and hoping to get some
we'll
good
get
news.
a ceasefire and peace
Yeah,
deal?
yeah,
Okay.
exactly.
Will that take gold down?
No, no,
Okay.
no,
Gold is on
because
its way. Yeah, gold's on it's like with the weak dollar. Gold's going where? Do you have upside targets?
gold has 2,700. target in my
Okay.
view.
Yeah, I've
You
heard
know,
that number. Yeah.
yeah, you know what? Uh, the gold, uh, the gold's trend has not much to do with what's going on in the Middle East.
Yeah.
If gold were to be influenced by any geopolitical issue, that will be related to the geopolitical issues in the Far East. So, in
Okay.
the Pacific
You liked
Asia.
you thought silver was going to be one of the best buys of the year. You have upside targets there.
I now see 32,
Okay.
but beyond that, I really have to check. But I know I think that it's going to go as high as 32 when the gold hits 2,700.
Okay. And then that'll be like the end. That'll be like when the euro's 115 and then they all correct again.
Certainly. Yeah,
Is that what,
right.
am I reading your mind?
Yeah, exactly. You're
Okay,
reading
cool.
so well.
All right. I tell you what, Okan, I want to thank you for coming in every quarter and sharing your knowledge. You have excellent insights. You develop your own proprietary stuff. Do you want people to follow you?
Yeah,
You
I
want some fans?
absolutely. Yeah, yeah. Why not?
Uh,
Of
uh,
course.
uh, Anyone in here ready to be Okan's fan? I think it's not going to hurt you to follow this guy. It's could give you, keep an open mind. It'll keep your account open. And you could follow Okan on X at his name, at Okan Abar. That's Aybar. Anywhere else people could reach out to you?
Yeah, they can reach out to me on LinkedIn. And for you to know, in the next months, I will start sharing English newsletters
Oh,
on
yeah, use
LinkedIn.
AI to translate for you.
No, 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 I will write in English.
Okay. All right. So you're going to have a service
Exactly.
in a
A
few months. Okay, cool.
few
All right.
weeks.
Well, all right. Well, my trading warrior brother, Okan Abar, appreciate you coming in and sharing your ideas with us. And I always glean something important from you every time we have a conversation.
Thank you. I appreciate too that.
All right, Okan Abar, everyone. I don't know about you guys. I'm exhausted. And it was only a 4-day week. Felt like I don't know, about a 10-day week. And hope everyone has a good weekend. You don't have to do anything today. Don't try and make your week on a Friday. And we'll see what happens next week. Good hunting, and above all, don't forget to be grateful that you could take risk and lose. People can win, and people can't afford to. A lot of people can't afford to be a speculator. So you're in a unique position. Uh, don't just count your pips, count your blessings. Have a great weekend, everyone. See you Monday, and thanks again, Okan.
Thank you. See you. See you later.
All right. See you, everyone. Adios.